Alright, hello and welcome to Camel Finance. I'm your boy Camel, and Coinbase has shut down their entire affiliate program, and this is a major red flag according to some people. So a lot of people are scared there's a liquidity crisis on the horizon, but I want to just talk about this again because I think something that people are missing here is whatever the number is. Let's say the affiliate program, they give everyone $10 worth of Bitcoin, £10, whatever the number is. We are currently trading around 1/3 of the price of the all-time high of Bitcoin. So Coinbase are having to give 3 times as many sats as they did at the high. So if you multiply this out by everyone on the affiliate program, it's costing them 3 times as much as it was 9 months ago. So this is almost the equivalent of selling your Bitcoin at the bottom. Doesn't it make sense to shut it down and let the price recover a bit, and then you can go back to giving people 1/3 of the amount of sats? I don't know. I just thought that's a perspective I haven't seen anyone mentioning. However, something a little bit more concerning is Coinbase has quietly halted Bitcoin Satoshi Vision withdrawals, BSV, amid rumors of an internal liquidity crisis. So this is much more serious. Whether the Celsius, 3 Arrows Capital or Voyager bank run problem will spill over to Coinbase remains to be seen. It's a developing story. A lot of people are sure that Coinbase is about to go down. I don't know how you can really be sure. Seems like speculation to me. I'm not saying it won't go down. I have no idea. That's what I'm saying. I don't know. But the Coinbase derivative exchange, Nano Bitcoin Futures, traded a record number of contracts yesterday, following 3 days of consecutive highs. So they are still doing volume in different places. And this was Coinbase's response to the insolvency rumors that people spoke of after Coinbase suspended its affiliate program. If Coinbase goes insolvent, apparently we're officially, well, maybe in the short term, maybe, but Bitcoin doesn't care. Understand that. Bitcoin doesn't care. Bitcoin will be fine. It's a self-healing, self-repairing network. Anyway, Coinbase has said it had no exposure to the bankrupt firms Celsius, Voyager, or 3AC. The company says it's unscathed by the contagion and the company's facing liquidity issues. So it's a trust thing, isn't it? Do I trust this statement? Not really, to be honest. Would I be surprised if this did turn out to be a lie? No, I wouldn't. Nothing against Coinbase per se, but this space is full of corruption. I'm not saying that's not the truth. All I'm saying is I don't know. But there's a very simple solution to this problem, isn't there? Just take your crypto off exchanges. Don't trust the exchanges with your crypto. It's not that hard. Something that is undeniable is Coinbase are losing volume. They're losing volume to Binance. Binance has recently overtaken them for having the most Bitcoin on the exchange. And even Uniswap and Coinbase are now almost equal daily volumes. So Uniswap was only 27% in January. It's now almost 50%, as you can see, almost 50-50 with Coinbase. So they are certainly losing market share. There are way more exchanges available today than there once were. There's way more choice, there's way more competition. So are they under some pressure? I would think they are. But everyone in crypto is under some pressure. The price is 80-something% off its highs, or it was, at least at the lows recently. So anyway, that's my 2 cents. Do I know? I have no idea. But neither do you. Just take your crypto off exchanges. It's not that hard. Meanwhile, Bitcoin just doesn't care. Look, it doesn't care. The number of addresses with a non-zero balance just continues to increase. This is adoption, right? At the same time, 21 Shares has launched a risk-controlled Bitcoin ETP in Switzerland. So this is more institutional adoption, more global adoption, more money coming into infrastructure, more investment products and exchange-traded products and exchange-traded notes are coming online all the time. In Colombia, the digital asset regulation framework has been proposed by a regulator. In other news, Minecraft has announced a ban on NFTs. The UK government has approved a new nuclear power station in the southeast of England. And whilst everyone in England is kind of being blinded by smoke and mirrors for who our new president or prime minister, supreme leader is going to be, the UK government has quietly announced plans for a contactless digital border, which will require you to have a digital ID. So, yeah. The Chinese banks have declared that their people cannot withdraw their money. And as a result, people are trying to burn the bank down, and allegedly they have had to park tanks outside the bank to keep people away from them. Seems a bit extreme to me, but of course if you just hold Bitcoin, then no one can ever confiscate it. Over in the macro side of the world, if bond yields are peaking, then big growers have room to start leading the market again. Here we can see the ratio of large cap growth to small cap value, overlaid against the estimated terminal rate for the Fed cycle. It's no coincidence that these two are correlated. And so you can see here the black line is the Russell 1000 growth versus the 2000 growth. So if bond yields are actually coming off, then we've got to be open to seeing growth start to do well. Transportation sector is telling us that whenever we get the optics sentiment 50 period moving average below 36, we get a red dot. This is always historically signaled the bottom is near. And more importantly, 12 months out from that signal, the average return is 35.81% in a 12-month period. So every time we've had one of these red dots, as you can see, 12 months later, on average, gains of 35.81% have been seen. Consumer discretionaries are telling us that the sector is ready to outperform. So consumer discretionaries priced in the S&P is just breaking out from this pattern here. So this is telling us to be open to consumer discretionaries being about to outperform the S&P 500. So perhaps it's worth having some exposure to that. And this comes at a time when commodities have been rolling over in the past few weeks. It's good news because commodities tend to peak prior to inflation. So you can see here industrial metals topped 4 months prior. Agricultural prices peaked 3 months prior. Oil peaked when inflation peaked. So it's quite likely that we're going to get a peak inflation readout soon, possibly a more dovish stance or a pause from the Fed. It's FOMC on Wednesday next week, I think. Wednesday? Yeah. So look out for that. In other news, Cathie Wood's ARK is liquidating the ARK Transparency ETF. And the Transparency ETF seeks to track the Transparency Index, which invests in the 100 most transparent companies in the world. And so, with all that said, let's take a look at some charts. Risk is apparently coming back on, for now at least. Next week, like I said, FOMC, probably going to get a bit choppy out there. But for now, we have a breakout on the S&P. If you were watching the channel the last couple of days, you know that I opted for the NASDAQ instead. So this is my current open trade on the NASDAQ. I also have an open trade on UKX. So not sure what's going to happen here, just kind of holding to see. I also have an open trade on JD Sports. So still long and strong. Oil, I'm just not interested in at the moment. If we can get a break above this trend line, as I've said, then that becomes a long opportunity for me. Gold looks like it actually is going to get down here to 1680. So preferably I want to see it spring below and a recover, or some sort of double bottom pattern along here would be fine with me as well. This has been historically very good support. If we convincingly lose this, retest it and start a downtrend, then gold is broken and I have to abandon my bullish thesis for gold. Bitcoin is doing Bitcoin things, isn't it? So we got this breakout of this trend line, sort of retesting the top of this now. So that's fine. We'll continue to push this trade and see if we can't make it up to 30k over the next couple of weeks. Ethereum showing relative strength, working on a retest of this trend line here. So hopefully we can get resumption, and then I see no reason why we can't go to 2100 or beyond that to 24. So we'll see how that goes. MATIC looks like it's working on breaking out of this bull flag, or it's going to have a crack at it maybe over the next couple of days. So we'll see about that, but I just want to keep pushing this trade. I want to see if I can get it up here. I don't want to duck out now just for it to break out and come up here. So I'm going to keep pushing that. Our experimental chart is telling us that there's still an awful lot of people sidelined with their stable coins, not willing to step in yet. So hopefully this can continue to break down, and thus stable coins can be deployed into the market, chasing the market higher. The dollar is trying to bounce off of this parabola again, so we'll see if it can. Mostly it's going to be catalyzed by the FOMC meeting next week. So I kind of expect not much to happen until Wednesday-ish, and then we'll get some true direction. Lots of chop to come, no doubt. The 10-year yields have broken out, but this is weak, isn't it? It's not like before when we just broke out and went. Here we are sort of hanging around. So above this line, you have to accept the breakout is confirmed. But if we get rejected off of here and come back down again, then I think we can call the top for bonds with a lot of confidence. And I think that's everything in terms of charts. Yep. So if you found value for your time today, I'd appreciate if you could drop a like on the video and subscribe if you haven't already. Turn the notifications on if you want to see the trades as they happen in real time. And until tomorrow, all the best out there. Take care. Cheers. Bye.